Well, rates are finally back in the sixes after slight improvements last week. So what happened last week? Well, we had CPI data on Wednesday, which was actually bad because it showed growing inflationary pressure, and that hurts rates. We do not want to see inflation coming back up. Then on Thursday, we saw the PCI numbers were also elevated, also showing overall higher inflationary pressure, but we had lower pressure in some key areas, particularly the areas that could and probably will affect how consumers actually feel inflation at the register. So this brought rates back down as traders now expect next week's PCE number to be lower. And the PCE, the personal consumption expenditures, is the primary report that the Fed uses to judge how inflation is happening. So we had negative and rates went up, and then we had rates recover at the end of the week. What do we expect this week? Well, we will have all kind of Fed speakers again this week and lots of housing data. This is the week that we get a lot of stuff on what's happening in housing. Specifically, Tuesday, we're gonna see Homebuilder confidence. Wednesday, we're gonna see both housing starts and building permits. Thursday, we see our weekly jobless claims, which of course aren't housing related. And then on Friday, we will see our final housing report, which is existing home sales. So why are home sales important to the economy? You just have to look back to 2008 and realize as the housing market goes, so the economy goes. So if the housing market stalls or fails, that's terrible for the economy, and we really need a strong housing market. So we will be watching housing data closely this week. So where are rates right now? Well, I told you we're below 7. The 30-year is now at 6.96%. The 15 years at 6.41%. And the FHA 30-year is at 6.33%. Remember, this is according to Mortgage News Daily. It's a website that we watch regularly to monitor what's happening in rates. Don't pay attention to what you read in media articles because they're usually from the Freddie Mac rate report, which is usually 4 days removed from the actual rate. So a lot can happen in those 3 or 4 days. Well, we're in the middle of what I think is winter's last push. It's getting cold this week, right? Temperatures are dropping all the way back into the lower 30s. Thankfully, we got sunshine in the forecast, so we probably won't see snow, but it is going to be cold. How does that affect you? Well, if you're thinking about buying, remember that first real spring warmth is when a lot of people go, okay, it's time to start the ignition and get back into that house hunting mode. Well, guess what? If you can beat them into the market, you can get in while it's still a little bit of a buyer's market. I feel like in most places, except the most popular areas of Birmingham, we're still in a buyer's market. You can negotiate on a contract offer. Will that continue into the spring? Who knows? But when prices warm up, we see more people get in the hunt, and that means more competition, and that usually favors the seller. So if you're thinking about doing something this year, this may be the perfect time for you to jump in. If you haven't been pre-approved, I can't stress enough getting pre-approved, particularly if you're self-employed or you've had some change in your employment since the last time you bought a house, because I promise you, getting that out of the way early just puts your mind at ease, and having your income completely underwritten is so much less stressful doing it before you write a house or before you start hunting than if you do it once you're under contract. We'd love to help you either way. Pick up the phone and give me a call, DM me pre-approval, and we'll be happy to have a conversation. Because at Weber Mortgage, we're a family in the business of helping families.